Good afternoon, everyone. My name is Regan Marock. I serve as Vice President for AKAM here in Florida. Thank you very much for joining us this afternoon and taking time out of your day to hear some of our experts discussing financing capital projects. We're very excited about the topic, and hopefully you'll be able to take a lot from it. But without further ado, I'd like to introduce my colleagues. We have Doug Weinstein, who is our Vice President of Operations, as well as Reginald Breton, who is our cash management strategist. With that, Doug, would you like to give a little bit of your background?
Sure. Thank you, Regan, and welcome to all the participants that have joined us this afternoon. As Regan said, I'm Vice President of Operations. I've been with AKAM a little over 30 years, and I've run the operations and compliance department, and I also head up our project management division. My experience is over 30 years of owners representation and project management experience for myriads of different types of projects, including ground up construction, exterior restoration, facilities build outs, MEP replacements, HVAC replacements, so as well as cosmetics such as hallways, lobbies, etc.
Perfect. Thank you. And Reginald?
Good afternoon, everybody. Thank you all for taking the time to join us. My name is Reginald Breton. Prior to joining AKAM a year and a half ago, my experience was 27 years in commercial banking, 15 years as a bank manager, 12 years in commercial lending. In the previous 10 years before joining AKAM, I bidded on over $100 million in project financing for condominium restoration, and I assisted on about 40 million of those projects for renovations to condominiums here in South Florida. And that's what brought me over here to work at AKAM. It's a pleasure to be here.
Thank you, Reginald. So, just as a starting point, Doug's department operations and Reginald banking, as of a month or two ago, they maybe saw each other once a week. At this point, both departments sections have been combined, and I would say they speak on the phone about 4 times a day, just based on how things have changed with capital projects and financing. If you have any questions, there is the Q&A box at the bottom. If you submit a question, we will absolutely answer it before the end of this webinar. With that, Doug, I'd like to get into with you, the importance of capital projects and really the definitions now of mandated versus discretionary projects. What's going on over there?
Sure. And we use the term capital projects as kind of a general nomenclature for different types of things. So I'd like to go in for a minute and just go into the type of projects that an association is going to be contemplating doing, or unfortunately being forced into doing. So there's first would be mandated projects. These are things such as mandated by code, such as certifications and recertifications. Corrective work, replacement of physical plant, whether it be HVAC components or other MEP components. That is something that's going to either be mandated by a municipality or a statewide code, or it's going to be mandated by the fact that a component has outlived its useful life and must be replaced. Whereas you have what we call discretionary projects, where some of these may indeed fall into end of useful life projects, but they also sometimes are more discretionary, such as changing an amenity space, doing a renovation to a fitness center, or doing new lobbies, new hallways, or doing something along the lines that, yes, it may be time for a refresh, but it is somewhat discretionary. And I think what you're going to see in a new atmosphere that is going to be facing South Florida associations is more of that mandated type of projects, particularly with research certifications and structural inspections, reporting that's going to trigger work that's going to be needed to be done. I think what you're going to see is you're going to see from both, and Reggie will touch on it in a moment, from the banking industry, but also from the insurance industry, you're going to see a lot more involvement with lenders and insurance carriers in an association's physical upkeep of their property. So with that in mind, I think that's going to beget a lot more capital projects that are going to be either mandated or considered mandatory that an association has to undertake. So I think the potential changes coming to the industry are going to be great. I think they are going to bring in the banking and insurance world into those, and which dovetails into essentially the crux of our webinar today, in that associations, to meet these new needs or these new requirements, are going to have a funding source. And we anticipate also seeing changes in the way reserves are done with associations here in Florida. I think you're going to see some modifications of that coming down from the state, which will then further look to combinations of how do you fund these projects, whether mandatory or discretionary. So I think the world is a little bit changing now. And I think this is a good intro into what we can expect going forward when a board is going to need that financing and what are the avenues that are available to them. So with further ado, Reggie.
Thank you, Doug. And to continue with what Doug was just discussing, regarding to financing projects that associations will now have to undertake, start early as possible. Oftentimes these projects, they have an idea that they're coming due or that they need to be completed, 1 year in advance. Speak with your property management, with your property management company. Organize your financials. It's never too early to start discussing your options and opportunities with banks for financing. Talk with your banks about not necessarily getting pre-qualified, but for a review of the financials, so that if there's any doubt or any questions or anything that the bank might need to see going forward with your financials, so that there'll be no problems with the underwriting process, the bank will be able to tell you, where, certain areas that the association might have to work on in order to tighten their financials to ensure the financing.
Now, Reggie, we obviously spoke about, starting early with the process, but to Doug's point, in some cases, this is now mandated and these associations are not being given a lot of time. Perhaps they don't have the reserves to fund the projects necessary. What advice do you have as far as navigating the process when it comes up? Hey, we need a loan, we have X amount of time to do the projects that have been submitted to us?
Sure. The best advice I can give is talk to your management company. Make sure that they have an individual there who can help guide the process and guide the board along the process to know exactly what is going to be required. Already now, what we're seeing is more information is being required for preliminary underwriting. One project that we're working on right now at this moment, the bank wanted to see a full engineering scope before even beginning the underwriting process. So that is becoming extremely important. Also, stricter guidelines, stricter ratios that the banks might be adhering to for their underwriting process. Use your management company as a go-between with the banks, so that they can best advise with you and the banks as to what is going to be needed going forward to secure the financing.
Reggie, I think you bring up a very good point in the terms of when to get started and what to do. And in the sense of, from an operations standpoint, one of the things that most capital projects are broken down into a 3-phase type of system. One is the initial inspection and report. The second is the development of specs, bid documents, and the actual bidding process. And then the third phase is your contract administration, where the job is actually ongoing and the engineer is overseeing it. Let's go back a moment to that first step. As Reggie said, banks want to see what that initial engineer report or the initial documentation for whatever project that they're looking for financing on, to judge the need and what the project involves. So that usually can be supplied to the lenders during that phase one of the project, which is your engineer or your professional will have a preliminary report, usually with a budget,
Correct.
depending on the project, which then can be used to satisfy the lender's information going forward before you get into the meat of the underwriting process. Because a lot of times, you know, you want to start the process, obviously, before you have contracts signed and everything ready to go, because it does take a while to go through all of the necessary steps. And I think with more associations doing this route, it may even extend the time frame that banks are going to need to go through that underwriting process.
Correct.
So I think that's something to look at from an association standpoint, is that when you go through this, both from the physical aspect of it and the funding aspect, it's better to start early rather than late.
Thank you, Doug. And actually, we just got a question from a gentleman, Alan Glazer, and it's a good, I think, segue into the next section of the presentation. His question is, if financing is needed for a project, are competitive bids from banks desirable and good management or required for condos? Reggie?
Absolutely, competitive bids are very desirable, and needed also. You don't want to just go to just one bank. You want to, you want to be able to see, and present more than one option to the board and to the association. So without a doubt, competitive bids are absolutely necessary. Also, there's different banks oftentimes have different underwriting guidelines. They might have different requirements for their delinquency ratios or for their investment ratios within the association. Some banks are more stringent with these ratios and guidelines. Other banks are more flexible, and if they're and they can use other mitigating they can mitigate some of the risks if they're being more flexible in other areas with their underwriting guidelines. So again, each association is different. Each association has different delinquency ratios. They have different investor ratios, different rental ratios. So absolutely, you have to get more than one bid if possible.
Now, Reggie, before going into a little bit more of the nuances of the multiple loan offers, obviously you being in banking for over 27 years and pretty much knowing everyone in town, when you're calling up the banks now to discuss potential loans, are they already getting overwhelmed?
Yes, and the increase from this year and over the last month, I don't know if they're necessarily getting overwhelmed, but they are very, very busy, and the increase is visible. And that I've heard directly from a handful of banks just within the last few weeks.
Okay.
Yeah.
So
very simply, yes, Regan.
That to your point on, I guess, getting started as soon as possible, whether it's immediate or a year down the line, it sounds like it's pretty impossible. Possible. So yeah, let's move on to the next slide then, and discuss the element of accurately comparing loan offers. I know, as I'm sure Doug does when he does specs on capital projects, that it's very important that everything is compared apples to apples, just like anything else. So Can you speak to us a little bit about the different elements that go into that apples to apples comparison? Maybe some things that people should be looking out for?
Well, first, one of the most important things is rate and fees. Everybody wants to know what the rate's going to be. Everybody wants the best rate, and they want minimal fees for their loans. But also there are other things to take into consideration as well. Do the loans have prepayment penalties? Do the loans offer the ability to re-amortize if necessary during the loan process when some of the association members prepay their assessments in one lump sum up front? Also, what are the deposit requirements that the banks are requesting in order to complete the loan? Some banks require moderate deposits. Some banks require more. Other banks require a full depository relationship. All the deposits of the association is to be moved to that particular bank. So again, going back to the question from Mr. Glazer about getting different bids, it's absolutely imperative because rates and fees are all going to be comparable, but other items such as I just mentioned, prepayments, reamortizations, deposit requirements from each bank, those are going to be pretty key, and not all associations are going to be able to meet some of those requirements.
Understood. And Reggie, with regards to that, I mean, what are you, when they're not able to meet those loan requirements, what are you suggesting to our clients that they do? I mean, reserves obviously cannot be created overnight. If a project has to be done, I mean, what are their other options at this point?
Try to work directly with the bank to see if the bank can mitigate some of those requirements. Perhaps downscale the project a little bit more, downscale the loan request to see if there's part of the project that can be pushed a little bit further down the road, and then some of this versus some of the more immediate needs of the association building. But to really just engage the banks at that point if that becomes an issue, to engage the banks directly to see how they can mitigate those requirements.
In tying into that, Regan, one of the last resorts for associations could be what we call contractor financing. And that is depending upon the type of project and the contractor that would be retained for it. Some contractors are able to offer associations financing. Again, that is something that's usually used as a last resort for those associations that do not have the wherewithal to do a loan scenario, but are going to need to draw out the cost of the project. Typically, it's going to be at above market interest rates, and it's not going to be a long-term solution. But again, it is an avenue out there, depending again on the project and the contractor. Although we really don't recommend it because it is going to be at less favorable rates than other avenues for financing.
Right, but we as management, obviously, it's our job to provide all options to associations, to even if it is last resort, to make sure that they hopefully they have one avenue. I know there's been speak about terminating condos, but I know a lot of people want to be able to stay in their properties. So definitely something I know Reggie speaks to the banks a lot of the time, and trying to, through relationships, figure ways to kind of get the rates and get approval. But do you, Doug and Reggie, you foresee your working together hand in hand only becoming more and more, correct?
Well, I was just going to mention one of the things, and one of the things that we'll talk about now is how my end in terms of operations really dovetails into Reggie's end with loan procurement. And you need, and I'm going to go back way back to the beginning in an association's history. And I was asked just recently on a webinar that we were doing on 40-year certifications. And I was asked, well, when do you start the 40-year certification process? And my answer was the day the building opens. So one of the things that basically entails that upkeep the building so that you never get to a situation whereby you're up against the wall having to do these projects in a compressed period of time and having to go out and get lending as opposed to using an association's own reserves. So let's go back a moment and go to the whole issue of financing for these capital projects or mandated projects. Don't forget, one of the things that boards have to look at, they also have to have somewhat of a crystal ball in the sense of when you know you're going to be doing, and let's use the typical example of a concrete restoration project, okay? You know, we know that those are typically going to happen every 7 to 9 to 10 years on a building, painting, concrete restoration, stucco rehabilitation, that type of thing. So what you have to look is you also have to look at your other potential project requirements, okay? Because you're going to be going out and taking a loan, and a typical loan on a project has two components to it, which Reggie can get into a little more technically if needed. But the first is during the course of the project, you're going to be typically drawing down the money you need as sort of, we call them construction portion loans or construction loans. And then at the end of the project, it turns into whatever term loan and that the association is elected to go through. And therein lies the rub, in the sense of you are now going to be subjecting the association to a term loan of 5, 7, 10, 15 years, where you need to really go back and look at what other capital projects or what other possible things that the association is going to be doing that would require funding down the road. Because you may come into a situation where you're going to need another funding in the same period of time that you still have an outstanding loan on. So that is also dovetail into something that you should look at when you do your loan shopping as to what is that bank's particular position on secondary or additional monies.
Correct.
During the course of that.
Correct.
And the other thing is that you also need to look at when you're going through the loan process and looking at your own particular financial capabilities, whether as Reggie and Regan have said, using reserves and combining it with a loan. You also have to take a look at the mechanics of the project and how the outlay of the project cost is going to be done. Typically on a major project, there's two ways of doing the payment steps. One is progress payments, which are purely based on the amount of work done for the project period. And it's usually on a monthly basis, so that you would draw down on a monthly basis based upon where you are in your financing scheme. But also you have to look at, is it a project that is going to require a large upfront payment to a contractor? And the types of those projects are more like an elevator modernization, where the contractor is going to need to order the equipment immediately upon contract signing. So there's going to be a large upfront cost. Same thing you might encounter with a lobby renovation or hallways, where you have to, the contractor has to purchase material at the front load of the job and not just do progress payments. So that needs to be thought about and worked with your consultants such as Reggie to determine what type of loan and what type of drawdown mechanics are going to be.
So Doug, it's interesting. We've been speaking about this question's coming up quite a lot now. A gentleman, Dominic Vaccaro, is asking, if a capital improvement is needed, do you need the majority approval from the owners?
Again, this is going to be depending on a mix of statute and your particular association's documents, okay? There is language that allows depending, and let's go back and again, break it down into mandated as opposed to discretionary, because this also will come into play. In order to maintain your building or correct a violation or correct a code issue, typically those can be done by a board without membership approval. Okay, so again, this is a blanket statement. You should consult your own counsel, depending upon your docs and their reading of statute. But typically, if you're doing something in order to maintain the building and maintain structural elements and protect the building and protect the structure, it is typically allowable that you don't have to go to membership. That being said, there are certain things that would fall during a project that would fall under what's called material alteration. And just to give you an example, concrete restoration / painting is a perfect example. If you're just doing that project and I know it sounds a little ridiculous, and you're keeping the building the same color. If it was white now, it's going to be white and there's no change, then does not require a material alteration vote of the members. But let's say your building's white now, you want to change it to an off-white with beige accents or do something visually different to the appearance, then that would trigger a material alteration vote that you would need to get to go forward, not necessarily go forward with the project, but go forward with that element within the project. Another example, if you were doing an exterior project and part of that is replacing balcony railings. So right now you may have picket railings on your building and you want to discuss putting in glass railings or some other type of railings, even to the point of instead of the pickets being vertical, you want them horizontal. Things such as that would trigger a material alteration in conjunction with the project. But if you were replacing them with exactly the same type, no material alteration would necessarily be triggered. But again, check with counsel, check with your docs, that type of thing. These are just blanket statements, but you should really, it might be specific association by association.
Thank you, Doug. So we're coming up on 30 minutes. I wanted to just have some closing statements from both of you. Reggie, I know you've put a lot of people at ease, especially over the last couple of weeks, people panicking, board members panicking, not having reserves and needing to do projects. Just, last statements, what is some advice you could give to those board members that right now are feeling a bit panicked about this process?
The building is yours. All of you own the building. You need to act decisively and you need to act cohesively. The most important thing is getting the job done, and again, acting decisively and acting cohesively. Everybody owns the building. They need to understand that.
Thank you, Reggie. Doug?
I think in closing, the best thing I can say, which has been our mantra over many, many years, is don't get to the point where you necessarily need the financing. And that goes back to the continual upkeep and preventative maintenance in the buildings and adequately funding reserves so that these types of projects, and I'm talking now about the mandated and the required projects, can maybe be done without having to procure outside funding. As far as discretionary projects, a little bit of a different story, because they're typically more beautification or changing an amenity space, like I said before, or making an improvement. That again, will be, discussed with your membership. But again, preparing, funding adequately, and doing the maintenance on your property as it goes through its aging process is going to be the key going forward for associations to make sure that they do fiscally prudent management at this point.
Thank you, Doug. And my closing statements would be, use the resources that are available to you. Don't try to go at it alone with this process. We as a major company, even we've banded together with operations and banking, working very closely together. But use the experts from each section of this process to help you through it. There's a lot of people that have a wealth of knowledge in their areas, and you want to do this right. So I want to thank everyone for joining today. On the screen now, you can see everyone's email addresses for Reginald, myself, and Doug. Please feel free to reach out to us by email, and most certainly you will get a response. If we do not know the answer to the question, we will investigate and get you an answer. So thank you again, and we hope you have a wonderful rest of your day.
Thank you.